The commodity-driven Siniski Ninoshuri driven Forex pairs like AUD, USD, NZD USD, and USD CAD are some of the most dynamic instruments in the FX market. Their movements are heavily influenced by global commodity prices such as gold, oil, and agricultural products. Understanding these correlations is key if you want to trade them profitably. But where do you start? What data do you need to keep an eye on? That's where economic reports come in. Today on FX Limit, we're breaking down the top 5 reports you need to watch if you're trading commodity-driven currency pairs. First up, we've got the U.S. Energy Information Administration's Crude Oil Inventories Report. If you're trading pairs like USD CAD, this is a must-watch. Canada is a major oil exporter, and fluctuations in crude inventory can signal shifts in oil prices. A higher-than-expected inventory tends to push oil prices down, which could weaken the Canadian dollar. That ripple effect moves USD CAD sometimes dramatically. So having this report on your radar gives you a crucial edge. Next, we turn to the Reserve Bank of Australia's monetary policy statements. Why? Because the Australian dollar is closely tied to commodity exports, especially iron ore and gold. The RBA doesn't just set interest rates, they provide insights into inflation, trade, and the health of the mining sector. This gives you a complete picture of where the AUD might be headed. Pay special attention to how the RBA talks about China, as that's a major export market for Australia. Third on the list is the Global Dairy Trade Price Index. Now, this might surprise some traders, but if you're in the NZD game, especially NZD USD, this is gold. New Zealand is one of the world's top dairy exporters. Movements in dairy prices can cause significant volatility in the Kiwi. A surge in global dairy prices often strengthens NZD, while a drop does the opposite. This index is released bi-weekly, and it's a highly sensitive trigger for intraday swings. Fourth, we look at China's Purchasing Managers Index, or PMI. Both Australia and New Zealand export heavily to China. So if the Chinese economy is expanding, demand for raw materials rises, pushing up commodity prices and, by extension, AUD and NZD. A lower than expected PMI can have the opposite effect, triggering risk-off sentiment and weakening commodity currencies. Watching this report helps you anticipate shifts before they're fully priced in. And last but not least, we have the Commitment of Traders, or COT, report. This one is a bit more advanced, but incredibly powerful. Released weekly by the U.S. Commodity Futures Trading Commission, it shows how institutional traders are positioned in futures markets, including commodities. You can gauge whether hedge funds are bullish on oil, gold, or agricultural products. If you're trading pairs like USD CAD or AUD USD, knowing how the big players are leaning helps you make smarter decisions. All these reports give you a foundation for understanding why certain currencies move the way they do. But timing your trades and identifying high probability setups, that's a whole different game. That's why tools like the Apex Trend Indicator can be a game changer. While these reports tell you what might happen, the Apex Indicator shows you what's happening right now. It scans multiple pairs and timeframes, alerts you when the trend shifts, and even gives you entry, exit, and profit target points all in real time. Imagine analyzing the oil inventory data and seeing a new buy signal on USD CAD backed by a 75% win rate. That's the kind of synergy that turns analysis into action. So while fundamentals give you the why, a precision tool like the Apex Trend Indicator gives you the when. You're not just reacting, you're preparing, strategizing, and executing with confidence. If you found this breakdown useful, make sure to like and subscribe to FX Limit for more powerful trading insights and strategies. And if you're ready to level up your trading, check out the Apex Trend Indicator on fxlimit.com. Catch you in the next video.